Winding up the company in Poland. Good afternoon, I'm Bartosz, and I work for Progress Holding. For 20 years, Progress Holding has been helping investors and entrepreneurs from more than 30 countries confidently enter the Polish market and successfully grow their businesses. Our team supports clients at every stage, from company registration to daily accounting and administrative services. In today's video, we'll explain winding up the company in Poland. It is dedicated to shareholders and board members. Topic: Step plan how to wind up a LLC in Poland. Adoption of a liquidation resolution. The shareholders must hold a general meeting and pass a resolution to wind up the company. This resolution must specify the date of commencement of liquidation, the appointment of the liquidator, and the manner of notifying creditors, entry into liquidation, and company name change. Once the resolution is adopted, you must file it with the National Court Register, KRS. From that moment, the company's name is officially amended by adding the phrase W liquidacji, in liquidation, to its published name. This public designation alerts third parties that the company is no longer operating in its normal capacity. Appointment of the liquidator. The liquidator, often one of the former board members or an external advisor, take over management. Their main tasks are to collect receivables, sell assets, pay liabilities, and prepare required liquidation accounts. Preparation of the opening liquidation balance sheet and inventory. Within 1 month of the KRS entry, the liquidator must draw up an opening liquidation balance sheet, showing assets and liabilities as at the start of liquidation. An inventory of the company's assets. These documents establish the baseline for all subsequent liquidation activity. Publication of the liquidation. The liquidator must publish a notice in the MSiG, Court and Economic Gazette, inviting creditors to submit their claims within a specified deadline, at least 6 months. This step protects the liquidator against undisclosed liabilities, liquidation of assets, and satisfaction of claims into cash. The liquidator converts company assets into cash. It means via sale of property, receivables collection. They then pay statutory and preferential costs of liquidation, court fees, liquidator's remuneration, secured creditors and employees, wages, social security, other creditors in order of priority under the Polish Civil Code. Interim reporting. The liquidator must prepare interim financial reports for shareholders, summarizing progress in asset transforming into cash and debt repayment. Mind: usually there are 3 financial statements. For details, approach Progress Holding. Preparation and presentation of financial statements. In total, at least 2 special financial statements must be elaborated and filed with the KRS. Opening liquidation balance sheet. Closing liquidation financial statement, which shows that all receivables have been collected and all liabilities settled, with a final surplus or deficit. Final settlement of surplus or deficit. If after paying all liabilities there is a surplus, it is distributed to shareholders in proportion to their shareholdings. Such distribution is treated as liquidation gain, and the company must pay corporate income tax, CIT, on that profit. If there is a deficit, liabilities exceed assets, the company is insolvent. Shareholders must cover losses to the extent of their unpaid contributions. This loss-covering contribution may be treated as taxable income, transformation into profit, and subject to CIT unless offset by existing tax losses. Confirmation of 0 receivables and liabilities. The final liquidation statement certifies that the company's balance of receivables and liabilities is 0. Only when this condition is met can you proceed to the last formal step. Application for removal from the National Court Register. The liquidator files a motion with the KRS court to strike the company off the register. Once the court enters the deletion, the company legally ceases to exist. Tax and regulatory filings. Throughout the liquidation, the liquidator must ensure that all required tax returns, including CIT-8 and VAT returns, are timely filed. In particular, the closing liquidation income must be reported, and any CIT due must be paid before applying for deregistration. If this presentation was valuable to you, please press like. If you still have questions, please write to us. Talk to you soon.